Welcome back to my daily report market analysis videos with me, Richard, market analyst at Hantec, on Monday the 9th of March. Looking at gold, a move higher above $1,700 today, and then gold came off. Gold is currently trading around the flat line, and it's been fluctuating higher and lower actually through the European session. I think gold is possibly just waiting or biding time before the US market opens, because at that point you're going to start to see the level of destruction that's happening through portfolios in America. And at that point you could start to see margin calls coming out again, and subsequently gold having to be forced closed again on futures. So subsequently we could see some selling pressure coming through gold. That's on a fundamental basis. Technically speaking, you're still very positive. You've still got the momentum indicators all pointing higher, although obviously today's intraday decline back from $1,700, given the fact that the market opened this morning at 1694, means you're trading essentially down on the session, even though compared to Friday's close you're trading slightly higher. You do have a bear candle, and that is starting to weigh a little bit on momentum, and you can see that if the market does start to sort of lose some support and come back, then a corrective move could happen. I mean, you've got this on the hourly chart where you've got this sort of head and shoulders top pattern potentially developing below 1660, basis of support. 1657 was that low early morning today before a rebound, but there is this slight sort of tailing off of momentum indicators actually in the last, well, this morning actually, which could turn corrective. And as I said, 1657, if you lose that as a basis of support, you could start to see a bit of a technical correction. There is room for it, undoubtedly. You've got the uptrend that comes in at 1597 today, so that's what, 78 odd bucks back from where we are at the moment. And 1611 was obviously the old breakout level, but I've drawn in a new Fibonacci set actually. 1641 comes in at 23.6% fib. I'll also show you something else I've sort of noticed interestingly as well in terms of projections. You do a projection or fib projection, don't go exact on my levels, but there or thereabouts. Fib projection, look at that, 100% Fibonacci projection of the original rally, of the original December to January rally, projected from the low, comes in around that 1701 level. So we basically had the 100% fib projection of that original rally. So does that now mean that we start to sort of just moderate the run higher? And as I said, today, that's pretty much what we've seen. So that's something to keep in mind as well. But certainly at the moment, gold is still positive. But as I said, when the US market comes in to start trading today, could you get some forced margin calls related to selling pressure? That would be the fear, or certainly the main caveat for holding gold, which, I mean, on a medium-term basis remains a very, very strong outlook, really. Interest rates, real yields negative, and yeah, it's a good time to be holding gold, but obviously volatility-wise, you could get chopped in and out, but on a near-term basis. But on a medium-term basis, we're still positive. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.